Good weekend, all. Ira Epstein with your Spider ETF wrap-up. And this wrap-up I'm doing on Sunday, the 24th of July, 2022. Beautiful day, a lot of rain that we had in Chicago, hot weather throughout the United States, but it's going to be a hot market. Why? We get the Fed on Wednesday. They'll give us what they're going to do, then the press conference. And on Thursday, we get our GDP numbers. So the combination going to be important. The market's looking at the possibility of another losing quarter. There'd be two back-to-back, which is part of the definition of a recession. But you need a jump in unemployment. You're not going to know that in front of this report. So that becomes important as well. We may know that after the fact, and that'll set the market off on a tear if we get a big jump in the unemployment. No way to know if that's going to be the case at this point in time. We saw over the weekend that, first on Friday, there was a treaty that was signed between Ukraine, NATO, Turkey, Russia. It was broken within 24 hours. Russian warships immediately attacked Odessa. They claimed they hit a warship. They claimed that they hit a building that was housing missiles and the like, but I think they were after the grain. So can you believe anything Russia says? Of course not. Okay, why would you try to? It just doesn't make any sense. As I predicted, I think this war is going to go on for years. I don't think this is a quick end to anything. It reminds me of how North and South Korea, and I'm not saying it's going to end up decades like that, but it certainly reminds me of this. And there's just such animosity now from the Ukrainians to them. No peace can be made. And it's in the best interest of Europe, NATO, to keep that buffer of Ukraine right where it's at. So this is how things are going to be for quite a while. There'll be talk over the week is China coming out and is their economy starting to grow, or what's the impact of the new wave of COVID having? We saw that Macau, they're doing more testing, shutting things down. They open, they shut. Is that going to be what goes on? Monkeypox spreading very, very fast around the world. Is this the new HIV? I don't know, but I've read things where people are saying this could be the next thing like that. I just don't know. But these are the things we all have to deal with. So in the marketplace, it's going to be one of these weeks where we're getting ready for the main events on Wednesday and Thursday of the Fed and the GDP numbers. When we take a look, I'm going to look at Meta now for a bit. We saw Snap got annihilated when their earnings came out and their forward guidance. It certainly isn't boding well for Meta, which was at one point here nearly 375, and we are talking a market that is down to 169. Big drop. Is the worst behind it, or is there more to come? That's really the question you have to ask yourself. When we take a look at the swing lines, you have a pattern of higher lows, higher highs, so a pause in the break. That is what that is. And I say a pause because you're still under the 18-week moving average of closes. Now, here's how I look at the swing line and the 18-day average. The swing line determines, is there a trend? The second part is it a real trend? Got what I'm saying? The word real. If you're under the 18-week average, the way that I teach charting, it means the bias of the market is down. You can get bleeps, and it's typical where you get them. Markets drop hard and you get bounces, but that doesn't change the overall trend. That's the bounce within a bear market, and that's all that this is saying. The resistance to me is the 190 level. If you get under 157.28, there may be another leg to the downside yet. When we look at Bollinger Bands, if you take out that 150, what did I say here, 157.28, the next number could be the 148.5, the lower Bollinger Band. Why? Bollinger Bands have a way of stopping the market often, not always. Look here. You would hit the Bollinger Band, you bounced back to the 18-week, and then you just fell apart. So the first challenges are very important, but succession, you get the challenge, you bounce, and then you go through it again. Other things can start happening. So it's important to learn how to work with that. In our website, we teach all this, all right? We have the enhanced Bollinger Band course. It's going to get you your master's degree, maybe a doctorate in understanding momentum and Bollinger Bands together. In any case, you're getting your bounce off it, the resistance 190 level. I don't see anything yet that looks bullish on it, but a close over 190 would have me doing this on a weekly basis, maybe a lows in. That would get me thinking that. In slow stochastics, it is saying no. The slow stochastic study is embedded. Embedded means that you're sitting here running for at least 3 weeks in a row where both the blue and the red lines are going sideways under 20. That means they're locked in. Until the red line closes at 21 or above, these rallies are short sales. On the weekly chart, looking for a retest of the Bollinger Band and out when you get a reading over 21. That's the way that I would teach the charting. You can see that you lost the embedded reading or the attempts at it right here, getting your bounce right into that 18-week average. That's all that this rally was worth. Now we get to see what is this going to do. I would call the bear trend neutralized, but not in an uptrend. Big difference. XLI, same thing. Bear trend neutralized, not in an uptrend. Resistance, 18-week average. The market fought a battle that it's holding so far at the 200-week average of closes. In XLE, momentum still down, trend down, resistance 78.17, but to get there you have to break through this last rally high of 66.99 or 76.99. That would be a big to do. Why? That would break the pattern of lower highs, lower lows. The other thing the market has done, it's gone from the upper band to the lower band and it's trying to neutralize itself. Makes sense to me. I think the pros are out of this market. I don't think they're in it. SPY. With the rally that you had on Friday, you took out this high. That's why I left it there. Higher lows, higher highs, correcting a market that had just been laying down with low numbers on the stochastics coming up. It can do anything this week due to those two big reports. GLD, still very bearish, still embedded. Rallies in this market into these areas here, probably the sell zone. I think the pros would come out of shorts if the red line closed over 21. You're not even close to it. So I expect good hard rallies to be sold over the next week or two until that number is lost. Still looking for lower lows wherever that ends up. Same thing in the gold miners, okay? They still look bearish as can be, an embedded reading, trend down. You're just moving to the right-hand side of the Bollinger Band where you've stayed for the past 2 months. I'm not seeing any sign yet of a bottom. ARC, we talked back here that the market might rally into the 18-day average. That was over 2 months ago. Look on YouTube, you'll see me doing that. And now you're up there. This is now where the game begins again. Is the right grammar, are things changing in China so much that they're going to impact all of technology, or is technology going to get hit with bad earnings and so on in this rally, takes ARC down again? I don't know. We're going to find out. Apple, you're up to the resistance zone. So now you wait and see. Is Apple strong enough to withstand a general worldwide slowdown on demand for phones and everything else? Or is their new product line going to be so powerful and people want it so bad, I'm one of them, that the market can still keep going up? I want to get rid of my phone now. In fact, I was out with one of my good friends last night. He used to be one of the key guys at Cisco. Now he owns another large company. And we were talking, and I said, which one do you have? Because I'm still on a 10. He says, I'm on a 12. I said, what are you doing? He says, of course, we're getting the 14s. That'll be the new version. He said, the only reason I even got this one is my 10 went bad, but the only better thing about it is the camera. And we both agree on that. The new parts are for the new phone. So that becomes the big question on Apple. Guys like me that are going to go out and spend $1,400 on a phone, whatever, it seems crazy to me. I have other things to do with that money, but I use it every day, all day long. On Tesla, you can see momentum picking up, so away you're going in this market. It was funny, the same person I was out with, this person from Cisco, we were talking because he has a Tesla, and I was explaining that I got an opportunity to drive the Plaid version about a month and a half ago. And my friend that had it, he says, do you want to drive it? And I refused. Now, this friend of mine from Cisco, we both had Ferraris, all the fun toys. And he said, why did you refuse? I thought, the car's too fast for me. I realized, what if I do the wrong thing? I'd like to practice. We were at nighttime on a side street. I go, what if somebody steps out? I said, no, I've driven long enough. I've raced cars. I don't have to hurt somebody. I said, that's the fastest car in my lifetime I was ever in. He's laughing. He goes, he's got one, and he goes, he doesn't have the Plaid, and he says, yeah, I don't need that type of speed either. He says, where are we going with him? Twitter. Okay. So the person from Cisco, his wife is a major league money manager, very wealthy people. And we were talking. I said, how you doing? And she said, what I figured. She says, yeah, this is where now you have to tell people we're doing better than the averages, but they're not making money. And of course, I never hear from them and my phone keeps ringing. And that's what you expect in this. So I said, what are you doing in Twitter? She says, just what you probably think. Yeah, she said, I throw away money at it. She bought hers around 37, we were talking. I came in a bit higher than that. And it is throwaway money. It's not big money, please. But I think the stock's going back up here, okay? All because I still think that Musk is going to buy the company, but I think he's following the LVMH game plan. And we'll see if I'm right or wrong on that. That's all that it is, folks. This is not a chart trade. TLT, you're neutral, absolutely now neutral going into the FOMC meeting. And I think that's where you sit until we see both what's done, and number two, the reaction to what's done, and number three, what does Fed Chair give us guidance on? What's he going to say about inflation? Is he going to say, yeah, they see it peaking? How could he not say that? Energy's down dramatically from where it was, but it could come alive very quickly this winter. Food prices down sharp. I mean, have you looked at what grains are doing? They have come down sharp in their prices. So a lot of raw materials have come down. Obviously, labor hasn't come down. Obviously, rent hasn't come down, but obviously, the opposite, new home sales are collapsing. So, different things going on. Be interesting to see what's said. And I guess that covers everything that we've got at that point. So, if you'd like to keep up with what we're going to talk about, and this is an important week for you to do so, in my opinion, this is how you do it. Let me get to it right here. Our research from Linn. Now, we cover we're going to cover everything that makes up the spiders in the stock indices, DIA, QQQ, SPY, everything there. The interest rate sector, all of it. Because you're trading from futures, that's what they're based on. Energies. This is a huge week. To get our information, to give it a try and see how that fits in with what you're doing, because we cover the option area, the spreads, we cover the futures part, and it relates into all this. Just go to our website under free offers. You can call my staff, and or you can just take your cursor, move it up right here, give it a click, and away you go. With that, I'm Ira Epstein. You have yourself a great day, and I will see you all tomorrow.